So, good afternoon, everyone. Good morning, everyone, for wherever you are. Thanks for being here this morning. I really appreciate it. Um, Today's topic is, you guys, if you've not heard me talk about rules before, you probably haven't been here. Um, when it comes to the three services here, I am clearly the rules guy. Um, and I am very stringent um, to rules. I know, don't need no stinking rules um, on trading. Um, when it comes to rules, there's some basic rules that I think are very very important in trading. First off, one of the things that I live by in my trading, and kind of was talking a little bit about this earlier in a little bit different way, um, is that I treat my trading like a business. Um, and the reason I do that is to help control emotion. Remember, rules are all about controlling you as the person because show of hands, type a Y. Type a Y if you're listening right now and you believe you are the worst enemy that you have when it comes to making money in the market. We are the enemy, right? We are the worst enemy to our results and our things in our trading, and it's because of emotion. So, how do we control emotion? We control emotion by being more matter of fact about what we do, what we are in trading. Remember that institutions, if you worked for an institution, it was your job to put to work, and people think, gosh, this has got to be super stressful. Of course, it really is, but you've got, at the end of every month, you've got another $25 million that you have to put to work. Okay. What makes it easy for them to buy and trade that stuff and not worry about it? It's not their money, right? I've worked with and coached several former brokers that thought, I know everything there is to know in the market. I'll show everybody here. I'm going to be a great trader. And they were the worst trader you can, I mean, horrible traders. That's right. No skin in the game. When you attach your money to your trading, we all become very emotional. I mean, it is just the way it is. We're very much attached. We worked hard for our money, and so consequently, we're very emotional about it. And it's only rules that prevent us from doing things that um, that that help us in battling that emotion in trading. Still today, I've done some coaching here over the last couple of weeks, and still today, after all I talk about in here, people won't use a stop loss. Don't give me that jazz about a stop loss. I don't need no stop loss. I have a mental stop. I'm going to call BS on that. Because how many of you have a number that says I can lose this much, but that meant, let's say your mental stop loss, I can lose $200 on this trade, no more, and it's always more than that. See, if you don't trade stop loss rules, how are you ever going to make money if you let your losses get too big? Rick used to say all the time, it's better to take a $500 loss. When's it good to take and when do you celebrate taking a $500 loss? Before it's $1,000 loss. Okay. And people will tell me all the time, stop losses don't work. They don't work. And why don't they work? Why don't they work? Why do they work for me so well, but they don't work for other people? Because I don't arbitrarily set a stop loss. I set a stop loss based on the price action of the chart, not where I want it to be, where the market says it is. When you look at this chart well, people will look at that and say, well, I'm going to buy this here, but my stop loss is here because I can't lose more than that. Okay, plan on getting stopped out. That's why it doesn't work. The price action of the chart says your stop loss is here. And if you can't take that kind of stop loss, you don't trade this trade. Not your trade. It really is that simple. It's a decision in business, not an emotional one. It's a decision in business. Price tells me where this is. Now, do I want to keep my stop loss here forever? No. How do I move it? If the stock moves up, then I'm going to move the stop loss underneath this area here. Okay? But if I can't afford this trade from this entry to this stop, it's not my trade. Or I have to come up with a strategy like a credit spread, a debit spread, a calendar spread, something to make that trade fit my tolerance for risk. Okay? That's why people will look at stop loss and they'll tell you all the time, stop loss doesn't work. Don't bother me with stop losses. And we think that the mental stop loss or just arbitrarily setting a stop loss based on how much we want to lose is going to work. Because that's the most conservative thing, right? Wrong. Price tells us where the stop should be. And you should follow that stop. You know, I can trade, if I can't afford this on a directional trade, I've got other tools. I can use a ratio spread. I can use a calendar. I can use a debit spread. I can use a credit spread. I could maybe pick up a synthetic. There's a lot of different ways that I can trade that. And here's the other thing. I was just talking about this over in Right Way Options. I don't have to buy an option. I can buy 5 shares, 10 shares of the stock and still make money doing it. Just because you're an option trader doesn't prevent you to buy some stock. I'm holding some longer term stock trades like right now in small positions that I'm up 20%. 20%. And it's not little money that I'm making on them. Don't have to buy the option. So set up a trade that fits the stop loss, the actual stop loss of the trade, and follow that. And I'm just amazed at how many people that have listened to me for a long, long time, we start looking at their trades. Where was your stop? Well, I was going to get out here. Okay, why didn't you? Well, it was going to bounce back. We're all guilty of that. Every single one of us is guilty of that. What are you doing to fix it? And follow a stop loss rule. Okay, so that's one of the very basics to do. Another rule that I think is very, very proven for me is I only take very select trades. I don't take a trade because I'm emotionally attached to a stock. I don't take a trade that is, let's say, in well here. There's the trend, but the stock is way up here and then shows a buy signal. That's not a trade for me. stock needs to be, and you guys have seen my rules over and over, near trend and near price support. I'm very picky about that. Whether it be more of a pullback opportunity trade or not. And the reason is because I know over history that my odds are better when buyers step in here than here. They'll step in here and then sell back into trend. Does that make sense? So rules about entering your trades. What kind of a trader are you? What is the strategy that you are following? And then you work to be that trader. I find far too many people are trying to be the jack of all trades. I tried to do that for a long time in the market, and I got a lot of nothing out of it. I traded a lot. I was really busy, but my account didn't grow. It's when it became dedicated to a specific strategy or a specific pattern in the trade, and I followed those patterns and trades, that I really started, and I required them to be there. Not an almost be there, not predicting it's going to be there. It's either there or it's not there. Okay, for entering a trade. And that improved my win-loss ratio. So simple rule of just knowing who you are as a trader and following your strategy and being strict to your strategy. I can prove without a shadow of a doubt that you can make more money by trading less if you wait for good quality trades. The problem is having the patience to wait, because everyone wants immediate gratification. They want to trade right now. I'm here right now. Give me a trade right now. Instead of thinking about, well, I want a quality trade, not just any trade. So when you're thinking about the rules of your trading, what are you doing to make it be more businesslike? I quote Ed a lot on different things, but one of my favorite things that Ed talks about is be the banker. When a bank loans money, okay, there you go, Hawk. When a bank loans money, they ask you tons of questions. You've got all this paperwork. They dot all the I's and cross all the T's, and it's just a monotonous amount of stuff. They want to make sure that their investment into you is going to pay off. But we're not doing that much in trading anymore because, again, we're not following any plan or any rules. We're rushing to trades in the market. We're not following any rules. Consequently, we're oftentimes just frustrated and emotional because we don't even have we're not creating a good basis for the entry into the trade because of rules. Why is this a trade? Why is this a trade? You guys ever been part of a service where they just emailed you 5 or 10 trades a week? And they talked about how great their trading was. They made money on it. And maybe they did. But when they do that, you don't know the why of the trade. And you didn't make any money. Probably lost money in that situation. So understanding that this is your trade or not your trade. And you can do that by a couple of different ways. Number one, I tell people you got to know your numbers. Okay? You got to know what you're trying to achieve. You got to know where you are and where you're going. Okay? So what is your stop loss? If every time you look at a trade, you say, here's my entry, here's my stop, and you know that number, you'll know, okay? I can take $200 risk in a trade, and this is going to cost $350 to to that stop loss, this is not my trade. Or I have to come up with a different strategy to make that a palatable trade, a trade that fits me. So I'm not emotional about it. When we take trades that create too much emotion in the trade, how many of you guys have ever had that trade? Well, you know, just take this right here, for example. Okay. Nothing bad really occurred in this trade, and yet we stop ourselves out before our stop loss would have really been hit. Anybody ever done that? To me, that's the worst, where I make the mistake. Okay. It was going to be a winning trade, but I didn't follow my rule to hold my stop or do whatever it is. I broke my own rule, and then the stock turns around and goes up. Okay. I had a trade just the other day. I've been holding CLF. And I wanted to hold this because I thought this was going to take off. My entry was here, in here. And I thought CLF was just going to move on up and really get something going. But it didn't. It moved up a little bit and then just went da 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 da. I didn't have enough profit in it to even protect it for earnings. So I closed the trade and took the profit. Following that rule, look what it saved me here. My rule is, unless I have enough profit that's worth protecting, I'm not going to hold through earnings. So I closed the trade. Glad I did. And even though it reversed and gapped up, if I look at this in hindsight, man, if I would have held this, but that's not realistic. Because when this occurred, you'd be in full-on panic, right? So why didn't you follow the rule? Why didn't you take the stop? So guys, really make sure you're planning those trades, and you're planning those trades carefully. When we look at trades, I was doing an example. Someone asked a question about buying Ford. And I look at Ford, and this is what I see. Let me get rid of all of these lines on here. And this is what I see in this chart. This broke this upside trend here in the trade. Just a second, I got to change this tool. It changed on me. It broke this upside trend, breaking down in here. So already this is a questionable trade. We get the election and we gap and jump right back up into here, but that doesn't change this resistance area in the chart where we have banged into this and failed and failed and failed over and over and over. So how do you prevent this from happening? Getting caught up into that move. Oh my gosh, this is just going to take off and go big. Look at that big gap up. That fear of missing out comes into the trade, right? Oh my gosh, I got to trade this. Well, the real simple rule that I use in the 3-8 trap is this is a crossover up trade. There is no long trade for me in the crossover trade. Because again, crossover here and it failed. Okay, so I have to wait for that to hold to prove that it can hold. Because when we cross over up and hold, I have a higher winning potential in a trade. Even this big crossover up couldn't hold. Okay, so that's one way that prevents me from taking a trade like that and putting myself at extra risk. The next thing is actually planning the trade. And I'm going to go back to the naked chart on this to plan the trade. Okay, would you guys agree if we're going to get into this trade, we might be getting in right here, right now, right? Right in there. If that's what we want to do, we're going to get in this trade. Now, where's your stop? Well, with this big gap up and that chance that we could fall into the stop, for me, the stop loss has got to be back down here. because we could easily slip into that stop and run down. Okay, now if I'm planning this honestly to hold, you can argue all you want and say, well, I'm putting my stop right here on that trade. And that's fine. When you do that kind of thing, you're just going to get lots of stop outs. You're never going to lose much money, but you're going to get lots of stop outs. I call it death from 1,000 paper cuts. Okay, it's really painful, slow bleeding death. Okay. Now look at the upside potential. If this resistance has been so strong in here, and you can say, yeah, but eventually this will break. True. Then let's wait for it to break. Because if I'm getting in here and I see that we have failed in this area multiple times, and this actually made a lower low this time, which is not a technically correct pattern, and my stop is here, my potential upside target is here, I don't need that trade. If I do that little bit of planning, so one of the rules that I do is for a business, is I'm making a business decision. Does this decision make sense? How many of you want to risk $1 to make $1 or less? I don't. And by the way, I made a point of it in the class today with RWO. You can't make that work even with a whole bunch of activity or volume. Okay? You risk $1 to make $1, you can go like crazy and do tens of thousands of those and still be dead flat, not make any money. Okay? So when I look at a trade like this, I have to look at the fact that, well, if that is a really big resistance up there, I would rather just pass on this trade. I could put this chart on a list and say, okay, if that is the fact that I want to be in Ford, then be patient. Put this on a list, let it break up here, pull back, and then look for your entry into the trade. A way that you can do that and keep track of the trade is buy one share. I do that quite a bit, and not just one share. Sometimes it's 100. I buy small positions for me. I just buy a share and then I wait because I have no theta decay. It doesn't cost me all that much, and I wait for the better pattern to set up before I put the high risk trade of options on it. Okay. Now again, what I'm doing is I'm removing the emotion of the trade because of my rules, and I'm applying a business thought process on this. Why do I want to risk money here, and is this worth risking money on? Okay, you guys getting? Is this making any sense to you guys? I don't want to just be preachy or anything like that. I want this to actually be important to you in a trade. But I want you to think about those things carefully in the trade. We want to be more deliberate about the trade entries that we take and why this is a good trade for the business. Okay? Make sense? And by the way, I do the same thing. Right now I'm on pace. I may beat my record, or my, it's not a record really, but nowhere near a record, but I may break my results from a couple of years ago. I made $130,000 trading futures on a 333 tick chart. I think I'm on pace to break that this year, to be more than that, trading a 333 tick very fast futures chart. And I only do it once in a while. I don't trade it a lot. Activity does not equal results. Quality trades produce good results. Randomly trading without a quality trade setup is just signing up for a beating. Okay, so it doesn't matter if you're an intraday trader, it doesn't matter if you're a longer term trader, the same rules apply. If you want to improve your trading, we have to start doing things a little bit differently than continuing to repeat the same things over and over and expecting different results. I didn't want to have to set hard stop losses. Nobody does. Nobody wants to do that. Okay? But the fact of the matter is, when I was not doing that, I didn't make any money. I wasn't making more. It was costing me too much in losses. Okay? And I wasn't making enough money. The winners weren't overcoming the losses because I let the losses get too big. Okay? Make sense? So really be deliberate about your trades. If we go back to that well, and by the way, this was Goodson that just before we came in here that brought up this chart. It wasn't me that brought up this chart. It came up in the LTA scanner, he said. But looking at this chart, if I look back here, go even to a weekly real quick, this has got blue sky above, right? Would you guys agree that this chart has a beautiful upside trend? It's darn pretty, isn't it? Really pretty. Would you guys also agree that this has a very clear, well-defined area of support? Now, both of those things improve the odds of trading. If this is a good trade for you that fits your risk tolerance, okay, where do you want to enter? And you'll notice here, it's got blue sky above. Now, this is technically a resistance, but all of these were technically a resistance on a pullback. If I'm in a good upside trend and holding a good support level, I'm looking for that entry into the trade. And I expect if this trend is, obviously, if this trend is going to continue, it has to break that resistance up there. So in that process, I'm planning that trade. Am I going to take this trade off if this has a black candle tomorrow? No. My plan is for this to move on through from this support in this trend, and my rules dictate that I hold this trade. Because there's nothing wrong with this chart, even with that candle. Take this as an example, a nice white candle, a black candle, and a white candle. Why can't the next one be this? Whoops. Right there. It can be. So you follow your trade plan and your rules on the trade. Is it also possible, looking at this chart, the way I've drawn that trend, is it possible, guys, that this could continue to bounce out here and then go? So are you planning enough time for that to be true? Or are you the trader that's just taking the knee-jerk reaction trade that says, hey, this is a bullish candle, it has to go up here? That is not true, and you know that. You've got the results to prove that. So are you planning the trade with enough time to be right, not just immediate gratification? These are all rules that I live by, guys, and these are proven rules. Okay? I do it in all different time frames of charts, and it doesn't matter what chart it is. It doesn't matter if you trade currencies. It doesn't matter if you trade futures. It doesn't matter if you trade intraday. It doesn't matter if you trade commodities. It doesn't matter if you trade a different kind of chart, like a Heikin Ashi chart or something. It doesn't matter. If you follow the rules, you'll win more trades. Your losses will be smaller and consistent, meaning that you know what your number is for your loss and you're going to be out. Okay? Now, another thing that I do, and I'm going to go to this really quick chart in here to display that. You guys see this is a textbook perfect 3/8 trap long. We broke the downtrend here. We rallied up, consolidated over. Entry into this trade is somewhere in here, right? Now, one of the reasons my win-loss ratio in futures trading is so high is because I am really anal about taking profits, extremely anal about taking profits. So what I mean by that is if I enter here, I typically trade with 3 to 5 contract trades. Okay? 3 contracts or 5 contracts is my normal trade. And the high number is just 3 contract trades. I see this resistance up here. So on this candle, as I'm coming into this resistance, I close 2 of those contracts. And sometimes, if that is a real strong resistance, just close the trade. My job is to make money, not to catch the perfect top or the perfect bottom. I'm not trying to catch a bottom here, right? I'm waiting for the higher low to occur. And when I enter the trade, I know where my targets are. If you lay out this trade has that much risk from the entry, but it has double the potential return to the next resistance. Okay? If it doesn't have near double the return or more than double return to the next resistance, I don't take the trade. Again, it's a business decision. Are you doing business to make money, or are you doing business to just be active? Okay, in the house building business, I had jobs that just because things didn't go as planned, that the job ended up having no profit. Just did it for the work. Okay? But if that continues, I'm out of business. Okay, you can't do that very long and you're out of business. The same thing is true in real trading. If you're always taking risks that is more than your potential gain, that's not a business plan that's going to work very long. It may keep you very active and you're trading more, but again, activity doesn't equal results. You can trade less and make more if you follow some rules. So when I look at any chart or any trade, I'm always looking for that target area in the chart to make sure that this trade has enough upside potential to make it worth the money that I'm putting into it. Okay? I only put my money into trades that show me the ability that I can make more than I risk. Otherwise, I'm going to go find another chart. Does that make sense, guys? And I'll tell you here right now, this year, my win-loss ratio in doing this on really quick charts like this, very highly noisy, very high-risk trading. I'm not trying to convince anybody to do this, by the way. My win-loss ratio, anybody have an idea what my win-loss ratio might be? Because I'm so strict on the rules. And by the way, I can go days and I don't make a single trade. Not one trade. I can wait for a good trade. Right now I'm running 83.5% win-loss ratio. For this year. Why? Because I'm very picky about the entry. I trade a lot less than people who intraday trade. And I always take profits coming into my target. Oh no, I don't just trade futures. No. In fact, I don't trade the futures chart very much. I've had one trade today, 3 contracts, $145. Not even a good trade, but it was a winner. So you can see it right here. This is my live account. Okay, one trade. I don't trade it very much. My point is here, guys, is that my win-loss ratio isn't because I'm great. You guys saw the 3-8 trap there, right? It's the same thing I teach over and over and over. Okay? It's not because I'm special. It really is not. It's because I'm very picky that the trade is right before I put my money in. Same way I did in business. If I went out and bid a project to build a house and the money wasn't right, the project wasn't right, I didn't take the job just to be busy. That's not why I went into business. I went into business to make money. So I walk away from the job and go find another one. Okay? If I'm trying to build a 7,000 square foot house for a rich person, but the money's not there, I don't care if it's a rich person or not. I'll go build 3 small houses that have profit potential rather than that one. I'm not here for the glory. I'm here to make money. Typically do in a month. It varies a lot, bio, but like I said, some weeks I don't trade at all. I'm just not feeling it. The market's weird, and I'm too busy, and I don't trade it at all. But then there's times when I trade it more. Like I traded the election night. During the night, because this is what was happening over here during the night. Okay, so it all depends on the time I have and the things like that. So it varies a lot. I would say upper end in an entire month, upper end probably, I'm guessing I rarely go past 20 trades in a month. Yeah, election night was easy. But I'm going to make about 100. Well, I'm sure I'll be over 130,000. Okay. Because I'm picky about the trades. I don't need a lot of trades to make a lot of money if I'm picky about the trades. Okay. And it's all about following the rules of the trade. Okay, PSEC. Well, PSEC is a downtrend. So I'm not looking at this for a long yet. This is also a crossover up trade. 3 just right now is just trying to cross up over the 8. Okay, so just like here, like I said before, this occurs, fails too many times. This occurs and it holds, it wins at a higher rate. Don't you guys want to be trading trades that have a higher odds? Just not trading to be busy, but trade trades that have a higher potential to making you money. I don't even like a trade that has an odds of 50-50. I don't want that trade. I'm not here to trade to be busy. I'm here to trade to make money. I want the odds to be better. Okay? I hold on to my money when it's a questionable trade. I'm not interested in it. Now, that doesn't mean I won't take a gambling trade from time to time. We all do that kind of thing, but it's rare for me anymore. Okay? So in this trade, what is required? Well, for me, because we're right up here at downtrend where we could fail, if I'm interested in this chart, it's got to break the downtrend and hold, because that establishes an upside trend. That's where the trend begins. Does that make sense, Hawk? If I trade this trade right now, think about this real carefully, Hawk, when you're looking at this. Would you say if you buy this trade right here, you're buying this trade directly at the place where it could fail? And that was one of my biggest problems for years in trading. I mean, and it's a hard habit to break because it's a fear of missing out trade. You're afraid you're going to miss out. And I would buy stocks right near price resistance. Okay. Well, I'm not that kind of trader at all. I'm not going to risk that kind of money for such a little win, because when those trades lose, you can have one trade lose and wipe out tons and tons of profit. Just one trade, wipe out tons and tons of winning trades. If that's your trade and that works for you, you know, if you can keep win-loss ratios up and make good money doing that, then keep doing it. Don't listen to what I have to say. But I can tell you, for me, that doesn't work, and it doesn't make business sense to me either. Risking a lot for a little bit. Okay. And that's okay. You don't have to trade the way I trade. The subject of the class today is not competing against you. The subject of the class today is proven rules that work. Okay? And I can prove my rules work. That I can hold a high win-loss ratio. Okay? And that's awesome. Keep doing that. Follow your rules and your guidelines. I'm just telling you, this trade's no trade for me. This is not my trade. It may be your trade. It's not my trade. I make the joke every once in a while in the trading room. You know, there's a lot of different ways to make money. If Warren Buffett knocked on my door, you know, he's in Nebraska, and if he came over to my place, he does that every once in a while. And he knocked on my door and said, "Hey, Campbell, if you don't trade this trade, you're crazy." If I look at the chart and it's not my trade, I don't care what he says. Okay? So, Huck, I don't care what you do. If it works for you, do it. You shouldn't care what I do. If you're making that kind of money doing what you're doing, then keep doing it. You have no concern over what I say. I'm talking to the people in here that are suffering and not making money and really want to turn their trading around. Okay? That don't want to buy 1,000 shares for 10 cents. Okay? So it's not an argument with you. It's talking about rules that have worked for me. Okay? Proven rules that I can prove work over and over and over with a high win-loss ratio. Okay? So a couple other things in here, guys, that I think is extremely important. You don't need to have a great big long list of rules. Keep it simple. Don't get obsessive, because it's easy to go the other direction. Technical people will tend to get obsessive. They have, too many things that they're trying to pay attention to. For example, well, the RSI has to be doing this, and stochastics has to be doing this, and this has to be in a crossover, and this needs to. Don't do that. Look at the price action and the price pattern and trade the trade. Okay? Trade the setup, the way it works for you, the way you can prove that it works for you, and it's a repeatable trade. Okay? Something that comes up over and over and over in the market. Is that clear, guys? I'm not trying to tell you to do something you don't want to do. I'm not. And I'm not saying that you can't make money in a lot of different ways in the market. I know you can. But if you're struggling, if you're not making money, I can tell you that this makes money, and it's not that hard to do. It doesn't require you to just go all in for a little bit of return. It doesn't require you to be a high-speed trader. Okay? Can make really good money doing it. All right. For example, I recently closed a trade in BMY. Made 80% return on it. It was a slow trade, but I just followed my rules. One trade, big win. Now, that's not going to happen on everything, and I understand that. But if you follow the rules and follow the patterns that you trade, it will happen more often than not, because we're following odds. Okay? Odds of winning trades. Okay? So, get those rules in place and then start working on the discipline of following them, because one of the first things that happens when you set a rule is you're going to break it. We all do, and even to this day, it's something I struggle with every day to follow my rules. Right? Every day, it's a fight, because we're all emotional beings, and we have all of those things that are going to push us. Okay, we get that big 1,500 point move, and the first thing in the market is, oh my gosh, I'm missing out. I got to buy. When in reality, we make a 1,500 point move in the Dow. What do you guys think the likelihood that the next thing that's going to happen is either consolidation, a long consolidation, or a pullback? Instead of the fear of missing out, what's the actual market condition, and how can I exploit that market condition? Okay, so I'm doing stuff like laying out bear call credit spreads, because I'm looking at the market likely pulling back. So I'm looking at trades that will take advantage of that price action. Take advantage of what is likely to occur. Market, without taking a lot of risk doing it. Okay. Any questions, guys, on this? Any rules that you've been trading that you're struggling with holding? One of the best things that you can do for yourself is to record your trades. And what I mean by recording your trades is you write down the trade, or you put it in a spreadsheet. This was my entry. This is the day I entered. This was my stop. This was my exit. This is the results. Okay? You can record however much data you want, but I would suggest keeping it simple, because you're not going to find problems in your trade, in your trading, unless you record your results and review those trades. And I got to tell you that for me, that when I reviewed my trades is when I discovered many of the mistakes that I was repeating over and over. And all I had to do to improve my win-loss ratio is stop doing the things that wasn't working very well and do more of the things that was working well. And magically, you're making more money in the market and you're enjoying your trading more because you don't suffer the big downtrends. Okay? Yeah, record those trades. Because you've got to go back and look and verify your results, because we as human beings have a tendency, take a trade that's a 50-50 shot trade. It wins just enough, right? And we've kind of got that little gambler problem that people, in Vegas have. We always remember the winning trade. We don't remember the losers. We put those losers out of our mind really quick. But if you keep taking that trade over and over and getting 50-50 results on it, what's the point of continuing to do it? Okay? It's really hard to make money with 50-50. It's a whole lot easier to just say, I'm not trading that trade anymore. This is the trade that gives me better results. I'm going to do more of these, and magically you make more money. So write down those trades and review those. There's several people in Right Way Options that have reported the review of their trades after learning that here. The review of those trades made them profitable traders because they found where their mistakes were. Mark in Right Way Options is running 80% win-loss ratios trading stocks, trading options on stocks, only following 10 charts. And he's making his monthly goals because he's following rules, and he found out where his mistakes were, where he had been causing himself pain, and he eliminated those trades, and all of a sudden he's making profits. Okay, so just to come right around to where I started here, guys, and I'll get out of here, is think about your trading as a business. Are you acting as a business? Are you thinking as a business? You're here to make money, not just to trade. See, the idea of being here just to trade is great for the brokers. They love it. But is that great for you? Is it working out? Or would it be better to figure out a way to improve that win-loss ratio, trade less maybe? And it doesn't matter if you can find enough trades, you can trade more. I don't care, as long as you're paying attention to that win-loss ratio, because that's the key. All right. Think of your trading as a business. Are we trading emotionally, or are we trading as a business? Are we following some very simple, very basic business principles? And the things that I'm talking about, guys, if you went into any bank to borrow money to do something, they're going to require way more than just those basic things that I just talked about. How are you going to make money, and can you show me the results that show that will pay itself back? That is a very simple basics in any business plan. And if you can't show that even to yourself in trading, well, maybe you need to back up and think just a little bit about what those rules are and apply those to your trading to start improving those results. So, hope that was helpful. Hope you guys got something out of this. I believe John is up next. I'm going to get out of here so he can get set up. You guys have a great afternoon. Have a great day. Thanks, everyone. RWO folks. I'll see you back over there for the wrap up of the day. Take care. Be safe. Thanks, Brad. Thanks, Edward. Thanks, Ruben. Mark, thank you much. Bio, thank you. You guys take care, and I'll see you over in the next room in RWO to wrap it up. Take care, guys.